But we begin with the markets, as we often do here on NYSE Live. Joining me now is Kenny Polcari. He's partner and chief market strategist at Slate Stone Wealth. Kenny, welcome.
Thank you for having me. It's always a pleasure to come home again.
Of course. So happy to have you back. So markets open in about 30 minutes. What are you going to be taking a look at most closely?
So I think this morning you got to look at the retail sales number that just came out. It was a little bit weaker than expected, the December number. But you have to remember that the November number was much stronger than expected, as I think a lot of shoppers and consumers went out and, bought a lot of holiday gifts earlier in the season when there were lots of sales going on and all that. So the December number is not really that concerning to me. I think, we've been talking about the consumer feeling a little bit stretched and trying to be very careful where they have their spending. So I'm not necessarily so concerned. The market futures turned a little bit south on the back of that news. But I'm really more curious about what happens tomorrow with the non-farm payroll report and Friday with the CPI report.
What do you think will happen with the jobs report and the CPI data?
So I think it's going to come in as expected. I think the NFP report is going to come in with, I think they're looking for plus 68,000 jobs created. What's important is going to be wages and unemployment. Are they going to remain, are wages going to continue to grow, and is unemployment going to remain at 4.4%, which it is expected to do, which signals, full employment. So there, it would suggest that the labor market is not at all suffering or collapsing or weakening at all. And on the CPI, I'm looking for the number to improve, which means it's going to be a little bit softer than the expectation. I think year over year, they're looking for plus 2.7%, which would be down from plus 2.9. That's a very big positive in terms of inflation. I don't see how anybody can complain about that.
Do you think the Fed is going to weigh this data that's coming out for their next rate cut decision?
I think they'll always weigh the data because they're data dependent. I don't think, though, that we're going to get a rate cut in March. Now, I'll be corrected if the NFP report is suddenly a disaster, and if CPI is a disaster, then I'll say, okay, maybe there's going to be a change here. But since I don't expect that to happen, I don't think you're going to see a rate cut in March. Again, I don't think you're going to see a rate cut until the summertime. And in fact, markets are not projecting a rate cut until July.
All right, and earnings season is also upon us.
It is. We're right in we're almost towards the end of it. It has been a very good earnings season. We got some Coca-Cola this morning. We got CVS this morning. I think Coke was a little bit cautious in their guidance, so it's causing a little bit of consternation there. But CVS, I think, gave a very strong report. So once again, I think it just adds to kind of where we are. The season has been strong. I think we got about 78% of the companies that reported beat on both the top and bottom line. They projected strong guidance going forward. That's right in line with history, kind of historical standards where it's been. So I'm very pleased with where we are so far in the earnings season.
All right. We've seen a majority of the Mag 7 companies report 6 out of 7. What do you think their reports say about AI and the future of AI?
So, look, I think the AI story is a complicated story. I still think we're very much in the early innings of AI. So I think, last year when they were all talking about spending all this money on AI, investors couldn't wait. They thought it was great. They went out and bought them. This year, suddenly they say we're spending even more money on AI, and suddenly there's all this nervousness, which I think is a little bit overblown. And I think that's obvious from yesterday. You saw what Google did. They just had a bond offering, 3, 5, 10s, and 40-year bonds. They were expecting to raise $15 billion. There was an oversubscription, $100 billion worth of money wanted to get into that bond market. So they raised it from 15 to 20, which suggests to me that there's plenty of money out there willing to be invested in AI companies that are developing, in these companies that are developing these AI models. So I'm not really worried about it. That doesn't mean that there aren't some names that are stretched. There are, but I don't think we're anywhere in this, people want to say we're in this dot-com bubble. I don't think we're anywhere like that at all. But do I think that some names are stretched? Sure, and they'll get corrected. And we saw some of that correction happen last week. And so those names are going to start to digest what happened last week and the explosive rally since, and then kind of settle in.
And how do you think investors should be approaching assets like precious metals and crypto?
So I think you have to be careful and you have to understand who you are when you talk. Let's talk about crypto first. You have to think about who you are, and what your time frame is, and what you really think. Right now, I own some crypto, Bitcoin. I don't own a lot. If it crashes to zero, it's not going to kill me, but yet I'm in it enough so I can kind of feel that game, right? Am I comfortable with where it is? Not really. It's down from 125, although my cost basis is lower, so I'm still okay with it. But I think you have to be careful in terms of how much you put into it, what your time frame is, and what your really risk categories. On gold and silver, for instance, look, gold is always a safety play, no matter what happens. Do I think gold has gone parabolic and it's a little bit stretched? I do. But you got a lot of central bank buying. You got China, you got India, you got Brazil as they try to, create their new reserve currency, which is always a little bit concerning. But I think gold just tells you that that not only you have that, but I think you had some momentum players that were nervous about what's happening in this country, and so they went to gold. I always like gold. I think gold should be a part of your portfolio, but I don't think you should be chasing it. The same way I don't think you should be chasing names that are extended.
And what advice are you giving to investors as they navigate the volatility and headwinds?
So it's the same thing. Look, I'm a wealth manager, so I talk to investors all day, but I talk to long-term investors, right? We plan for the long term. We're not planning for next week or next month. We take a long-term view. So, as always, I think you have to be in it because it's time in the market. Look, we just saw the Dow pierce 50,000. When I came here in 1980, the Dow was trading at 792. That's a 6,200% increase in the Dow. Think about all the compounding that has been. If you had money and invested in 1982, where you would be today. I think that speaks directly to kind of having the long-term plan, being disciplined, and staying in the market and not trying to trade the market.
All right, and any sectors that are interesting to you right now?
So I think it's going to be a value play this year, more than growth. I think growth will do fine, but I think value is going to outperform, and you're already starting to see that, right? We're seeing industrials just blast away. Energy, consumer staples, one of the most boring sectors in the whole economy, is now one of the leaders. It was an underperformer last year. It's one of the leaders today. And I think that speaks to kind of this change in mood about where investors are looking to put money into value. And you can see it as the rotation comes out of some tech, not all of it, but the people are taking money out of tech and redeploying it. It's not like they're taking it out and just putting it in the bank. They're finding other places in the market, and I think the defensive play, the value play, is going to be where they find that.
All right, Kenny Polcari, partner and chief market strategist at Slate Stone Wealth. Thank you so much for joining us at the New York Stock Exchange.